Hello, everyone. This is Mental Enterprises 2015 back with some market analysis. I wanted to take this opportunity to show you what I'm seeing on my Google Finance spreadsheet, StockScope 2.0, and to just talk about some things that have been going on in the markets. Everyone's tracking, GameStop, BlackBerry, Nokia. Some of these, they call them short squeezes, but I don't think they're all short squeezes. However, the GameStop trade is costing hedge funds billions of dollars, and I think it's also causing some volatile market conditions, which we're going to get into here. So, if we look at the volatility chart, you'll see that volatility ticked up to, we can go down here, 37, 30, and 33. So that's up from the low 20s. And you can see that clearly on the chart here. There's a huge spike. Basically correlates with the fact that the S&P 500 was 15% above its 200-day moving average. As you can see here, I've made a note that when it is that high over its 200-day moving average, it's kind of in range for a correction. And since then, it has gone down to about 9% above the 200-day moving average throughout the week. And we've actually dipped below the 50-day moving average by about 1%. And then for our news, we'll get more into the headlines specifically, but showing that the news is kind of expressing some negative sentiments, some concerns about this increase in volatility that we're seeing. And then over the last week, we started the week with about 100% of sectors that I have in here over the 50-day moving average, and we're down to 58%. So we're starting to see some weakness in parts of the market. I'm not trying to be Chicken Little. I'm not saying that the sky is falling, but I am going to get into why you should look into some downside protection and some possible assets for that. Um, so for the stocks tab, a lot of these were not under their moving averages. AT&T has been for a bit, but Amazon is below its 50-day moving average. McDonald's, Visa, Mastercard, Walmart. So we've got some typically strong companies. Facebook got hit with a lawsuit and some bad publicity. So we've got some strong companies that are falling below their moving averages, and what that typically tells me, especially when the financial companies, Visa and Mastercard, start going down, that there could be some second order effects in a sell off. So um, I've explained this, all these different columns in some of my other videos, but I do have my tripwire column, which if there are 5 specific criteria met for growth and moving average and price to earnings to growth ratio, then this column reads true. So right now, Facebook is in that range. Don't know if I would call it a buy because of the bad publicity that it's recently gotten. But still a strong company, still the largest social media network, in most of the world. And then scrolling down, our second one right now is Regeneron. So they're a biotech company. Pretty high growth over the last year and 5 years for a biotech company. But their price is kind of stalled out between the $400 to $600 range. But they are at a decent earnings per share. The price to earnings over the growth ratio is very competitive, actually pretty low. And they could be primed for a breakout, once they start coming back up towards those moving averages. But the purpose of this tripwire is to show me a high growth company that goes below its moving averages is essentially trading at a discount, even though it is high growth. And then if we go down some more, so let's get into downside protection, talking about gold miner stocks. So we've got GOLD, which is Barrick Gold Mining Corporation, and KGC. The only reason AAAU is not in this one, that's an Australian gold ETF, is because it doesn't have any data for its earnings per share. So, but this one would probably also be in that range based on the growth rates that I would expect out of it. But essentially, gold is low right now, and so is silver. And so those two assets, when they're low, and the rest of the when they're low or stalled out in a certain price range, which they have been, and the rest of the market starts to dip, people will start moving assets into gold and silver as downside protection. We also have to remember that in the U.S. economy, we've had a lot of stimulus money injected into the economy to make sure that there's enough money and liquidity. But what that does is it ultimately devalues the US dollar, which we've already seen it lose traction against the euro, going from $1.16 per euro last year to about $1.21 per euro this year. And then we've got another stock that is under its moving averages, shows high growth over the last year and 5 years, and is trading at a very low discount relative to its growth rate. That's ticker EDUC. I would recommend looking into it. I'm going to look into it myself, just based on these numbers here. So as you can see, I've got 300 something tickers in here. So it's a lot, but what this helps me do is boil down which ones are, high growth, low price, essentially. And it lets me see what the broader market is doing. If we go into the news tab, I've changed the link for this just to import, maybe more broad market headlines and also get headlines from different companies. So, Investors Business Daily, Market Watch, Motley Fool, which I don't really like Motley Fool, Seeking Alpha, Yahoo Finance, CNN. So we get a wide range here. But even just looking at this, what I like to do is look at the individual headlines and see if I'm missing anything. So they're talking about GameStop, Bitcoin, Elon Musk as usual, Johnson and Johnson vaccine news. Jim Cramer put that one up on his show. I think he thinks that it's going to be a good move going into the vaccine distribution. We're looking at Microsoft, Apple, Tesla. So the usual stocks that are always in the news are of course in these headlines. So, but sometimes what I'll do is I'll scroll through this and I'll try to see if I've missed anything that maybe I should be looking at. If there's any stocks that they're talking about that I should be looking for. We go over to the sector tab. Like I said, about a week ago, none of these were under their 50-day moving average. They were all above it. And now we're starting to see mining, consumer discretionary, utilities, staples, industry finance, energy, materials, real estate again. And then the S&P 500 and the Russell 2000 have both dipped below their 50-day moving average, which is a short-term trend indicator. But I think that there are some, there's volatility, there's a lot of money getting pumped into the markets. So I think that, and for me, I like to have 20 to 30% cash, and then maybe I'll also move in a good chunk, maybe 20% into stable investments like bonds, or a bond ETF like GOF, Guggenheim Strategic Opportunity Fund, and then gold, ticker GLD, and silver, ticker SLV, which there are some rumors that silver could be the next short squeeze, but I don't think we can confirm that just yet. We'll stay tuned in on Wall Street Bets for that one. Thank you for tuning in today. This spreadsheet is available on our Sellfy website. The link will be below the video. Thank you very much. If you like what you see, please give us a like and please subscribe to our channel for more. Thank you.